Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for September 4th, 2024. Well, my goodness, we had pretty nasty little bear show up yesterday after some manufacturing data continues to show that our manufacturing is in decline. 5 straight months of declines in manufacturing, and beginning to worry the market about a slowing economy. And we saw some pretty heavy selling yesterday, but was it tragic? I don't think so. So how about we take a look at what happened overnight, and then we'll take a look at those charts. First off, if we take a look at Asian markets had a pretty rough night last night, selling off strongly. The Nikkei fell 4.24%, or 1,638 points. Australia was lower. Hong Kong was lower. And Hong Kong fell 194 points at 1.10%, and even the beleaguered Shanghai index fell 0.67%. If we take a look at European markets this morning, they are bearish across the board. The DAX is down 0.71%. FTSE down 0.60%, and the CAC down 0.95%. If we take a look at U.S. futures this morning, we have U.S. futures actually pointing to a lower open, but honestly not horrible. At the moment, NASDAQ is taking the worst of it right now, showing 127 point gap down here on the NASDAQ. The Dow is only looking for about 70 points at the moment to that downside move. If we take a look other places here, if we take a look at oil, boy, oil had a pretty darn rough day yesterday. If we look here in the oil sector, hold on. Sorry about that. I had to reboot my TC2000. I seem to be having some kind of a malfunction here this morning. So XLE, as you can see, had a rough day yesterday, pushing down, trying to bounce back up. We'll want to keep an eye on that here this morning. Now, these are the oil producers, but oil itself, let's go to OIH, the oil holders. And that oil holders, as you can see, had a really rough day yesterday, pretty ugly in that move of the market. So we are continuing to see pressure, and that really is because of the situation where we're feeling all of a sudden that there is a demand problem here in the United States. So we'll have to keep a close eye on that. If we were to take a look at our precious metals here this morning, gold, as you can see, gold had kind of a rough day yesterday, pushing down, ended up rallying back up though by the end of the day. This morning we have gold looking just a little bit lower here in the market. Right now, gold futures only down 3 points. We have silver trying to move just ever so slightly higher here this morning, trying to push back up after a really rough day yesterday. Copper, platinum, and palladium also lower this morning. If we take a look at the crypto markets, well, crypto's having a rough morning here as well. We saw Bitcoin gap and move lower yesterday after trying to move up early in the morning. Right now we've got Bitcoin down $1,506 a coin, looking pretty darn bearish here overall when it comes to those cryptos. A little bit of mix though. Litecoin happens to be up, which is interesting, but a little bit of pressure there in the market. And of course, when we take a look, part of the reason is we had yesterday is we had the dollar zooming up yesterday with a little bit of concern here in the market as those bonds tried to hold up. If we take a look at the 2-year bond this morning, however, a little bit of softness coming in there. 2-year bond 3.84%. 10-year bond 3.82%, and the 30-year bond is 4.11% this morning. So we'll have to keep an eye on those. So what does all that mean? Well, how about we settle in? Let's buckle up. Let's get ready for the for the Wednesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at these charts and see if we can gain a little bit of information about how we might want to approach the market for today. Remember, everyone, we want to be really cognizant that we have to shake off that bias. We have to look at the chart for what it is, not for what we want it to be. Now, yesterday, obviously, pretty hard sell-off here in the diamonds, but I got to tell you, all we did is push back to test this support. And one of the things that this is showing us is just how overbought we were in the market to have a swing like that, and all we did was come back here to price support. We did come underneath that trend just a little bit, but at the end of the day bounced back up to hold on to that trend into the close. So if the bears were to continue to find inspiration here today, and there's every reason to believe that they could, then that push down into here to this next support level does look like a possibility. We'll want to keep an eye on that. And like I've said before, if that breaks, that's where some real worry is going to come into the market, and we're going to start moving down here and possibly even sinking into this gap here in the chart, which would be an awfully painful pullback in the diamonds to be doing suddenly. Now, if those bulls can find inspiration today, then a push back up, and I would look for a little bit of resistance right across there. See if we can push back through into that area. And if we can, then we're going to be up here trying to stretch right back up and test all-time highs and things in the diamonds, blue sky above that. Now remember what we did yesterday, we pulled back pretty substantially, but we're a long way from that 50-day moving average. So if the 50-day moving average does start to draw here on the diamonds, remember that's going to be a gap fill right here of that move, and that would be a painful pullback in the market. Looking at our SPY, pretty darn rough day yesterday, failing this price support. And what's probably worse here is we missed that opportunity, at least at the moment, of hitting a new record high in the SPY. We were only a little less than 0.5% or something away from making a new record high. To have this come in pretty substantial and now breaking the low part of that support here in the chart. So if you look on lower, you can see we've got some areas that we can move in, and then there's this gap below that could certainly be filled, and then that possibility we could slip down in here into this more major area, a price support area of the chart. So looking pretty ugly there at the moment, but remember, one day does not make a trend. It all depends on what the follow through of that move looks like. Now, notice that we've come back here to test that 50-day moving average here in the pre-market. Looks like we got a pretty good shot of testing that. So that's also going to give us that little bit of maybe hope that we can catch a relief. But any relief back to the upside here in the market, we're going to have to watch these areas of resistance up here, because a failure at a lower high would be critical. So if the bulls can find inspiration here, let's look for that pushback up to see if we can regain this little area of price support, and then we'll start pushing back up into here into this major area of congestion. And like I said, a failure up here could be critical. So we would need to see those bulls be able to push right on through here in that big resistance area and get right back up here over the next several sessions to see if that can hold. If we take a look at our QQQ, now QQQ took the worst of the damage yesterday and is experiencing worst of the selling here this morning. pushing back down pretty solidly, and of course breaking that 50-day moving average and failing at that 50-day. So if the bears continue to find inspiration here, you'll notice there's still another gap down here that could be filled. It's not a big gap, but there is a little bit of gap down here that could be filled if those bears were to start pushing. We've got a pretty decent area of price support, as you can see. Really pretty strong area of price support right there. So pushing back down into there, we may catch that price support in the chart. If we were to push beyond that, believe me, I think the market is going to get really scared if we start pushing down into this level and potentially even breaking that level of the chart. Now remember, once again, one day does not make a trend, but as you can see here in this chart, we may have that situation where we've created this lower high, and we're certainly not looking bullish here at the moment on QQQ. But any rally back up, we would start looking in this move in here, see if we can come back up and maybe pop back up through that gap, find that resistance level in here, push on higher. But once again, any rally back up here, we're going to have to be watching carefully for that possibility of that lower high failure in the chart on the QQQ. And remember, 50-day is going to be at our resistance now up here in the Qs. IWM also had a pretty darn rough day yesterday, and pulling back, breaking that trend here in the chart, looking pretty ugly overall in that break of support, break of trend, pushing back down. Now you want to notice we do have another trend line in here for that upside trend that could hold us right in here on this area of price support. So if the bears were to continue to find that inspiration, I would look for a test down in this area. And if you take a look, we're right there at that 50-day moving average this morning with the selling here this morning. So keep an eye on that. That 50 could also provide that little bit of support right in there to bounce us up and prevent us from coming on down. If, however, those bulls find inspiration today, then a push back up. Remember, we've got some resistance here in the chart that could certainly resist us from going up. And then, of course, the bigger area of resistance. And once again, we run into that possibility that we could end up with a lower high failure here in the market on a rally back. We'll have to watch that pretty closely. Looking at our VIX, we have got a situation here in the VIX where we saw a lot of fear coming into the market yesterday, pushing up. And if you remember, I suggested if we broke through this area, we might come up here and work to fill that gap. We did that yesterday. Any additional selling, we could come up into this little resistance area of the chart up there around, well, the low 23s in our VIX. Remember, for anyone who is an option trader, when fear starts coming into the market, implied volatility increases, and that means all options are higher priced. So remember that carefully. Anything you trade in options, it's going to be reflecting those prices, and you're likely to see the bid-ask spreads widen out as well in options, just having market makers protecting themselves from this potential volatility. If the bulls were to find inspiration here today, then a push back down, resting back in here onto support, would be a likely place. However, if that's the best we can do on the pullback, that creates that possibility that we could make that higher low, and that's where some real selling can start. So watch that carefully. If we can push on back down below that with some bullish activity and start to recover some of these support levels in the chart, then we may see that fear die back. If we take a look at our T20s, I got to tell you guys, TC2000 is struggling so much here this morning. I'm having to pause the video over and over. I'll wait for this. We'll see if we can get through the T20s, but there might not be much more in this morning's video. Okay, so here's the T2122. We'll want to keep a close eye on that here today. Remember, as much as we sold off yesterday, it really didn't make a huge dent in T2122. Obviously, it relieved an awful lot of overbought pressure here in the market, but notice we only fell into like 59% here. So watching that closely, what that would suggest, if the bears continue to find inspiration here today, we've got a bigger move yet to the downside if those bears were to really engage, continuing that push to the downside. If we bounce back up in here and those bulls find inspiration, well, we have certainly opened a door for those bulls to push if they can come up with bullish inspiration in the data today. But remember, we've got those resistance levels above now that we're going to have to be watching on any rally back. Now I'm going to try to change this to the other charts, but you can hopefully trust me on this. If we go to T2108, percentage of stocks, there it worked. T2108, percentage of stocks pulling back above their 40-day moving average, pulling back. We're still holding above 50%. We've got support levels in here. So even though this was a pretty rough day, it wasn't catastrophic in the charts. T2107 is going to show us that same thing. It was a rough day, but not catastrophic. Remember, it requires, we need to see what the follow through is going to be in these charts. And our T2101 showing that breadth pullback, but that possibility of that little hook coming into play. Now remember, corporate buybacks are still underway, and we'll have about 50% of all companies in their blackout period by about mid-month. So they're starting to roll into that now, just a little bit at a time, but we'll have to watch for that corporate buyback activity. If they want to finish up this quarter, we could see that surge here on this pullback. So watch that carefully. What we don't want to see, if you're a bull in this market, what you don't want to see is you don't want to see this breadth increasing as we sell. That means the bears are gaining energy and momentum. So be watchful of T2101. So with that, let's take a peek at our economic calendar here for today. And our economic calendar, we certainly have a couple things to be paying attention to. International trading goods. Right now, international trading goods is expecting a bigger negative number to come in, a negative 78.8. This could be the key element for today, or the key report for today, to continue to potentially drive bearishness in the market. So watch that carefully. We've got factory orders. Factory orders are expected to come in higher, 4.6, which would be interesting. That would be a bullish number for the market, showing an improvement in factory orders, up from a negative 3.3. A miss here could be really disappointing for the market. We've got the job openings report that will be coming out as well. They're looking for 8.1 million, and those jobs, we want to see that continuing to decline to help the Fed in lowering those rates here in the market. Treasury buyback announcement. We've got 4-year bond auction and a beige book here at 2 p.m. If you take a look, we've got going into Thursday, pretty busy day. Mortgage applications, Challenger job cut, ADP jobless claims, productivity and costs, a PMI composite, and ISM services. We've got a natural gas report as well as a petroleum status report, all on Thursday, along with some bond auctions and some more Treasury buyback results and the Fed balance sheet at the end of the day. Remember, this is all going to culminate in that employment situation number on Friday. That does tend to give the market just a little bit of hesitation or pause. So don't be too surprised if we start to rally back up to see some pretty choppy action, kind of waiting for those numbers to come in there. A lot of volatility in the market. Now I'm going to try really quickly to see if this is going to work, but what I'm going to suggest on your notable earnings for today, click the link below the title of the video. That'll take you over to the morning blog where you can catch that full list of notables. There's not that many, but I am afraid that if I start running through those, I might start getting delays here in my TC2000. So with that said, let's take a look at some stocks that could be setting up for today. But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, and that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow, and I do truly appreciate you doing that. That means the world to me, honestly, that you're supporting the channel and supporting the effort of putting these videos out every day. Thank you to everyone who shares these videos out on your social media feed, and also for those who continue to support the channel through the Buy Me a Coffee link, which is also below the title of the video. So thank you so much, everyone. You know, one of the places that you can look here in this market, and remembering, guys, that these are not recommendations to buy or sell any security. You need to follow your own due diligence and follow your rules. Don't blindly follow anything I say about trade ideas in here. It's only for analysis purposes. If you take a look at defensive sector stocks, my goodness, those defensive sector stocks got the most of the love yesterday. What we saw, I think, yesterday was a real deleveraging from tech and a major push into protection. People were looking for stocks that had good dividend yields. Take a look at Altria continuing to run to the upside. Stocks like Philip Morris, stocks like Coke, stocks like KHC, stocks like Mondelez, Constellation Brands, things like even Walmart were holding up really well, being in that consumer defensive area. Ross Stores pushing up in the market. So a lot of good things happening in those defensive sector stocks. Take a look at AT&T. AT&T had a great day yesterday, pushing up into some resistance here in the chart. Verizon, we saw big moves in some utilities in the market. There was a lot of bullishness in utilities yesterday. Again, folks were looking for safety, dividend yield, things like that, because there is a concern or a worry that we might be running into a slowing economy, which means a potential correction of the market is possible. And I say potential because I don't know that yet, but that seems to be the worry here. So we saw a lot of those things moving to the upside yesterday on that defensive side. Now, I also saw a lot of things in the short ETFs starting to make some rallies to the upside. Take a look at SH, take a look at PSQ, take a look at UVXY. So quite a few things on that inverse ETF lists. They really started to show some bullishness yesterday, pushing back to the upside. So keep an eye on those. Anything that is a good solid dividend payer, anything that's in the utilities, anything where folks can seemingly pick up a little bit of security in the market, did a pretty good job yesterday. Overall, I would continue to keep a close eye on things like TLT. Now, TLT, a bond fund, it's really going to depend on what those bond yields are doing, but you can see overall we've been moving to the upside. We've got a big resistance up here in that chart to deal with, but that possibility, if we're going to cut rates, if we continue to see this weakening of the economy, this is another safety play where people could run to bonds to pick up a yield. Remember, Warren Buffett, he's no dummy, and Warren Buffett now owns more treasury bonds than the government owns. he sees something. He's got a massive cash hoard. He's sold out of the market heavily, and he's bought up bonds. He's looking for yields there. So there is a rush to security here at the moment. Now, that doesn't mean that we can't have a flip-flop here and flip right back up to the bullish side of this market, but be a little bit careful here overall. Bond funds like BND showing some bullishness here as well. So I'm going to cut this video off here just because I know I'm pushing my luck on TC2000 continuing to work. I want to wish you all a fantastic day. Thanks so much for being here and listening this morning. I appreciate it. We'll see you right back here bright and early Thursday morning. I wish you all the very, very best. Take care, everyone.